Abizer Diwanji, founder of Neostat Advisers, joining us this morning. Abizer, thanks so much for taking the time, and we're looking forward to this conversation. Specifically, the sense on the street yesterday seems to be that the announcement of a farm loan waiver is not good news for good repayment behavior. Is this what you're interpreting as well? There are some others that are interpreting that this would be net positive for the banks.
No, so I think, as you rightly said, Alex, the behavior is a big issue. So I don't think the hit has been taken by the state. So I don't think banks will be hit negatively because of the waivers announced. The government will bear the cost and give it to them. But it's a very short-term measure. If you look at it even in the past, I don't think there have been any meaningful gains that have come out of farm loan waivers. In fact, if you look at it in the past, what's been seen is that after that, there is a particular spike in the level of NPLs because there is no sustainable growth. If you talk about, I'm a restructuring guy, and when I talk about restructuring, I would say that you only back sustainable businesses. And this is not sustainable business. This is just a waiver given to farmers who are unable to pay the loans without getting into the crux of why they're not able to pay the loans. So I don't think you're solving a problem here. You're just giving a temporary relief, but it impacts behavior very negatively because then people know that a waiver is coming at some stage, so might as well do it. Banks are forced to lend to the agri sector because there is a requirement under the priority sector lending requirements to lend to agricultural sector directly. And that's the reason why banks have to bear this NPL. Is for them, it's a cost of doing business, and they factored it into their overall costing, and that results in the larger profitable sector actually bearing the cost of these agri loans in the longer run. So I don't think it makes sense to do these one-time schemes. However, what one should actually consider is, the crux of our problem is uneconomical farming. People own smaller farms, etc., and it's very uneconomical in terms of what they do. If we could do an Amul-type structure, which said that, okay, let's get into farming cooperatives, and people who are given these waivers have to necessarily contribute their farms into this cooperative, so to say, so that economical farming can happen and shared profits can happen. That would result in more sustainable, farm-based loan.
Abizer, the way the street is looking at banks as a result of this is negative, and you clarified that eventually they are not going to be taking the hit. These
not for this waiver.
Not for this waiver.
The implication on farmer behavior of actually not paying loans without the state declaring a waiver will fall on the banks.
No, fair enough. My point is that even the reimbursement, so to speak, that will come from the government will and can come with a lag. There is going to be some sort of impact for these companies, isn't it?
Yes, so yes, there could be some liquidity related impacts, but that is not that significant. The larger impact is the NPL impact, which I don't think the state is willing to, is going to pass on to the banks.
And private banks, would you say private banks are relatively, more protected?
In a sense, yes, but everybody has to do agri lending. The private sector banks tend to do it more sensibly. So they do it to agri-related sectors, which are more safer than direct lending to farmers. The PSU banks are mandated to lend directly to the farmers, not by regulation, but by behavior. And that's where they end up taking a higher hit on their balance sheets.
This is Neeraj here. Good morning. I think maybe anecdotally, if I look at the pricing, stock market price behavior of the PSU banks, then post-COVID, they have outperformed the private banks. And one of the reasons that is being cited, maybe market is observing the price behavior and saying this, but frankly, the lending culture, the systems, etc., of PSU banks over the last 5 years have improved dramatically, and therefore the ask that maybe the valuation should be higher. Could things like these, I know you're not an equities guy, but I'm just asking, could things like these, and if there are 5 other states coming up for elections in May, so if there are more farm loan waivers, etc., announced, could they dampen the valuation argument for PSU banks versus the private banks?
So in a sense, that's the reason why PSUs are valued per se lower, right? I think they have done a lot in terms of technological advancements, corporate lending, culture. So everything else, they've actually pretty much done what the private sector does. But the the so-called social banking implication is what is pushing their prices down in a sense. And a farm waiver is part of that, because it's not again, it's not about the farm waiver. It's more about the behavior that comes post that, which really impacts the banks. So yes, I mean, at the end of the day, because of the social banking obligations of the PSU, they are valued lower.
Quick question. We've been talking about the West Asia war, the Iran war, and the impact on all sectors, all spaces. For banks, do you think there's any exposure? There could be exporters, there are force majeures being called. Either way, what is the kind of hit possibly for banks?
I wouldn't be able to quantify it, Tamanna, but the fact is that, the banking sector actually represents the residual risk of financial risk of any of these events that happen globally, right? So at the end of the day, corporations are leveraged, and it impacts the leveraging because the bank's recoveries get hit. So clearly, the ultimate financial impact does come onto the financial sector, and it will come.
That is a good point, because the thinking is that it's a domestic business. It is well preserved compared to some of the other sectors. But at the end of the day, they will be left holding the can if things go south.
The results of banking depend on the results of their borrowers.
Well said, well put, Abizer. Thank you. Always a pleasure to speak with you.